This is Shellis and Associates, Inc. with a 2021 tax update for business. I'm Pam Shellis, an enrolled agent with Shellis and Associates. We are first going to go over some COVID-related issues, some of the relief provisions that were provided in the last 18 months. If you received funds in 2021 for the Paycheck Protection Program, be sure you have documented how the funds were used and apply for forgiveness before the deadline. Originally, the PPP funds were to be reported as non-taxable income in the year the PPP loan was forgiven. Revenue Procedure 2021-48 now advises the funds can be reported, 1, as eligible expenses are paid or incurred, 2, when an application for PPP loan forgiveness is filed, or 3, when the PPP loan forgiveness is granted. Since the PPP loan forgiveness increases basis in partnerships and S corporations, timing is important. Many businesses had losses that were not fully deductible in 2020. If you determine that the inclusion would be more beneficial in 2020, you can amend that return and the related personal returns. You have 3 years from the date that the returns were actually filed with the IRS to amend the returns and make the changes also on the personal returns. Another provision is the Families First Coronavirus Response Act, or FFCRA. If you provided paid sick leave for employees with COVID-19 and met the requirements, you received a credit on Form 941 in 2021. That credit is taxable income on your 2021 business tax return. If you provided the paid leave and didn't claim the credit, you need to do so now. You must paper file Form 941X to obtain the credit, even though we know that IRS is taking months to process any paper returns. This is the only way right now you can get the credit for a prior quarter. You must claim the income even if you have not received the refund. The rules for depreciation and expensing have not changed, but the maximum for Section 179 expensing has been increased to $1,050,000 of qualified property. Also, bonus depreciation is still available for qualified assets with a useful life of 20 years or less. Net operating losses, or NOLs. We had a special provision for 2018, 2019, and 2020. We have a 5-year carryback for these years. This means any 2020 loss could be carried back to 2015 and could offset taxable income for that year. Any excess would then be brought forward to 2016 and later years until it was absorbed. Taxpayers may elect to forego the carryback period and carry NOLs forward if the election is made on a timely filed return. For 2021, the rules have changed. We no longer have a carryback period except for farming. They have a 2-year carryback, but they also may forego the 2-year carryback if they determined it would be more advantageous to carry it forward. Bits and pieces for 2021 only, especially for the first 3 we're going to look at now. Business meal expense in the past has always been 50% of the qualified business meal expenses. For 2021 only, there is a 100% deduction if the meals are purchased from a restaurant. You are not required to dine in. It can be take out, but it has to be a business meal. It has to be purchased from a restaurant. IRS just released a notice the past few days that allow businesses to treat the meal portion of a per diem allowance to be attributable to the same rule. Charitable contributions for C corporations have increased from 10% to 25% of taxable income for 2021 only. Qualified business income deduction. This deduction is usually 20% of business profit. It's generated and calculated at the entity level in partnerships and S corporations, and then passed through to partners and shareholders on Schedule K-1. The income limit for a specified service, trade, or business, which includes health, law, consulting, acting, financial services, to name just a few, is now set at $214,900 if single and $429,800 if married filing jointly. The phase-out limits here are new for 2021 only. Retirement plans. Contributions can still be made to the following plans through the business. SEP IRAs can be established and funded until the due date plus extensions of the return. This means that after December the 31st, when you calculate your profit or loss for the year, if there is cash flow available, you can set up a SEP IRA. You can fund the IRA up to 25% of qualified wages of all employees, and that can be done up until the due date plus extensions of the return. So you've got some time to do some planning and possibly accumulate the funds needed to make the contribution. Simple IRAs. Deferrals can be made through your paycheck, but only to plans that were established by 10/1 of 21. 401k. Only if the employer allows an additional deferral from your pay in December of 2021. There are other retirement plans, defined contribution and defined benefit plans. They're more costly and more complicated and difficult to set up at this time of the year. If you have any questions or would like to know how this applies to your particular situation, give us a call or contact us through shellisonassociates.com. Thank you for listening.